Hello, everyone. Welcome to the Digital Transformation Podcast. Another amazing episode is on the road today. And I would like to, as usual, to welcome my co-hosts, Cyril Coste and Frank Italia. Thank you for joining.
Hello, everyone.
And our guests that today will help us exploring the world of blockchain, Web3, and NFTs. I would like everyone to warmly welcome Theodora Lau. Thank you for joining.
Hello, thanks for having me.
And Nikolaos, that is helping us in discovering today a lot of applications into the blockchain world. Welcome to the Digital Transformation Podcast, Nico.
Thank you for having me.
Fantastic. So where do we start? I would like to first of all give you a little more of ground about our guests as usual. Theodora is a founder at Unconventional Ventures. She's a book author. Actually, she just released a new book a few weeks ago. Podcast host of One Vision and a public speaker of fintech, financial inclusion, and tech for good. While instead, Nikolaos is a senior manager at a Net Company and investor in the blockchain economy, working majorly, as I said, in the Web3 sphere, emerging technologies with major EU software integrators. Who wants to start with the icebreaker questions with our guests?
Well, I jump. Okay. A few years ago, we had metaverse everywhere, NFTs everywhere. Web3 also had this kind of little fame at one point. And when we did the research for the show, we noted that in the first half of 2022, there were $120 billion investment in the metaverse. Do you think that companies are still continuing to invest in the metaverse, or are they repurposing what they've learned, or what has been, basically since the peak, since the top of the hype, what has been your view and your experiences? I don't know if Nikolaos or Theodora, you want to start?
I'll jump. This is a fun one because I've been asked that quite a few times already this past year. The first reaction to people hearing about the new book, Metaverse Economy, was, geez, Theo, why? It's dead already. I've gotten that quite a bit. Actually, even as recent as a couple of days ago. Theo, why are you writing about that topic? My funny comeback is, look, there are, I don't know, a few continents in the world. So there's the West. I hate the differentiation between West and East, but there it is. We have, Europe, UK, US, Canada, what have you. And then we have the rest of the world. I recently spent 2 months in Asia. And I can almost tell people I feel like I was living in a different world. Every single fintech conference I went to, every single conversation that I had was around Web3, metaverse, digital assets. What can we do? What are some of the interesting use cases? How can we use it in education? How can we use it in government? How can we use it in healthcare? And how do we change a company? I even came across a company that changed their name to gear completely towards the metaverse. I came back to the US, the conversation went back to, how do we enable digital transformation in banks? How do we use less checks? How do we do super apps? We've done super apps for almost 6 years now in the other side of the world. So a short answer to your question is, the metaverse is not dead, and the metaverse is not meta. Is a whole much bigger world of how it could be. I would go back to thinking about internet back in, the early 90s. That was when I went to college. I went with a huge clunky laptop, and we all got an email address. We got onto the quote unquote internet where there was not much there. And then fast forward to Windows, fast forward to this little handy devices that we all carry with us, basically a computer. I couldn't imagine back in 1990 that we would be able to order a ride, order food, and do all of these things in a little machine. So, I think there's a lot of possibilities. Is it going to be here tomorrow? No. Is it going to be here next year? No, but give it time.
Theodora, that's actually quite interesting. I am wondering, because you've talked about this difference that we have between the Western world and the Eastern world. Why do you think that is? Like in your 2 months there, did you have the chance to understand why this big difference?
Do you remember back? I'm dating myself. Do you remember back in the old days when we had wireless, where there were different protocols, right? So in the US, for example, we had CDMA. We could not take the phone outside of the US to use. So if I were to travel to London, if I were to travel to Singapore, I needed the different phone because that's GSM and is not gated in the way that we're gated in here. I would say it's the similar thing. There are different shall we say, pace of adoption, if you will. Mobile internet on the cell phone at that time was way more advanced in Asia than it was out here. Infrastructure perspective, I think, from financial services, we are a little bit more established. So it's harder to make change. I'm not going to get into the other side of my speculation, not in the call in here. But I think genuinely from a culture perspective too, is we want to try something new, right? There are a lot of things that is not really working the way we would like for it to work. So for example, the dominance of big tech companies who are all based in the US. So could there be something else that we can play with? Would there be a different way of doing things?
Okay, makes a lot of sense to me. I have a question for Nikolaos instead. You have worked extensively on Zaptec and emerging technologies. I've been checking a bit of your background and all the good things that you have been doing. Would you like to explain a bit to our audience what Zaptec stands for, and eventually describe significant advancements that you saw in this area in the last years?
Yes, of course, different authorities across the world that are responsible to regulate a smooth transition to emerging technologies like blockchain and metaverse. They need to take action on how to regulate and oversee the industry to safeguard investors, consumers, users, you name who is, let's say, the target audience. Zaptec means supervisory technologies, and there is no a single technology or a mechanism that be included in this category. For example, when we're speaking about blockchain and digital assets, obviously we need to create mechanisms to oversee the number of transactions, who are those users, identify if there are any illicit funds being transacted through different blockchains. So it could be a combination of different technologies that create new tools that help regulators create insights around emerging technologies and also help safeguard different industries. If the question is related to metaverse, I say that it's still too early for regulators to oversee metaverse. We're only just now starting. I see first applications coming mainly in the gaming industry and also conference organizers. Definitely the European regulators who are more proactive and I would say they are concerned immediately with when new technologies are rising and they want to promote new technologies. They have already started discussing if Meta or any other big USA company could establish a monopoly. So I'm pretty confident that they will also develop different mechanisms to also oversee metaverse. But Zaptec, to conclude in general, is quite exciting because regulators, they also feel the rush that they also need to develop new technologies in order to monitor new trends or technologies that until now they were not that widespread, and they realized that they don't have the necessary tools and they need to innovate themselves.
Okay, that's a quite of an interesting topic, because most of the time when we approach the new technologies, there is a regulation factor that needs to be taken in account. If you remember about how everything is happening with the AI now, just because it's very trendy, but there is also another important aspect, that is the impact that it has on the world, and I'm particularly now moving into the topic of the green shift. My discovery, talking with the Cyril and with the Frank yesterday, was that we were discussing this topic in 2023 globally. We will have more investment in solar than oil and gas. My question for you, Nico, and of course for Theodora immediately after, is what can blockchain add to this topic? Is there any kind of project that you are aware of that is moving more towards the green shift?
Yes, actually, it's quite interesting, because these days I'm working on an enterprise project about green bonds. So I will say that the blockchain technology definitely has mediums in order to transform the energy market. We see a lot of enterprise applications, and I will say after financial, maybe energy-related applications that are using blockchain technology, at least from my perspective, and potentially the leads that I have coming second. And because as an industry, energy is also quite fragmented. There are many different players that need to come together in order to transact. I feel it's a perfect example why we need the blockchain technology. Now about green shift, I remember, I believe I have heard it from you, Michelle, from another podcast. The difference of green shift and greenwash sometimes is ambiguous. I will say that some initiatives a few years ago, probably they didn't have much depth, but right now the whole industry is more mature, and we have set the right foundations. There is new infrastructure that is scalable, and also product managers have better expectations what they should expect from the technology and why they need to replace traditional databases. So I feel new projects that are coming now to the market have better chances of succeeding now in comparison to 3 years earlier.
Amazing. Theodora?
So I like what you just said too, and I'll add to it. One of the examples I spotted last year is a company called Reseed, and it's based in the US. It's a community-based tool, if you will, that provide a revenue source to small-scale farmers so that they will maintain land, if you will, millions metric tons of carbon stock on their land. And then they use AI on top of it to verify, hey, this is really the land that you have, to trace back into the market and sell those carbon bundles to people as an investment. So I don't know exactly how that will go in a few years, but it gives you a little bit of a, oh, wait a minute, this is on top of everything that we could do. Now, people would say, well, carbon credits. I think there are some other question marks around that particular topic. Why don't we just reduce instead of just trading numbers from one to the other? But, it is the beginning of perhaps hopefully something better to come.
Yeah. Cyril and Frank, do you have examples?
I can think of, for example, energy credits, which I think is most likely the same thing as what Theodora was just talking about, or even attracting through the use of tokenization. They could be used. The blockchain could be used to attract investments. Could make it more appealing for big investors, for example, to grab the shares and actually invest these ideas and activities for to make more viable any kind of project which is a green project for the future. I can think of a project that I worked on. It was a big investment company that actually developed an application, a mobile application, and one of the features in the mobile application actually gave the user the possibility to go through a survey so that they could actually see what the impact in terms of carbon dioxide that they were actually releasing by how many planes they were using per year, their habits, and so on and so forth. And then it would give them the possibility to actually buy a tree, plant a tree around the world in different areas of the world, and this was all regulated through the use of blockchain, so they could actually use
totally transparent.
Yes, it was totally transparent, and that would actually give their users the opportunity to make up for their production of CO2.
Cyril?
Yes, I'm thinking about a Siemens that is sponsored by Siemens, which is called the SideGreen. And it's a blockchain where manufacturers can track the emissions at each step of the manufacturing process. So it's free. It's open to everyone, to every manufacturer. So there is a consortium that has been created. And it's basically use this idea that everything on the blockchain is transparent. And the only way for actors to trust that their suppliers correctly measures and record their emissions is basically to make it open, not just a piece of paper between two parties. So that's promising, and beyond that, there is also all this idea to optimize energy use, manufacturing process, in order to reduce the emissions, because it's one thing, to try to compensate our CO2 emission, to offset, but it's always better. It will always be better to not emit emissions in the first instance. And I think this is where the real battle is really reduce the CO2 emissions. So yes, so if you're interested, check it's SiGreen. It's a blockchain that tracks CO2 emissions.
Yeah, great. I heard a lot of these projects. I remember when Lasting Dynamics became carbon neutral certified, what we did was choosing the projects in which we would then invest the budget, for the carbon compensation. And at the moment, if I recall well, I'm checking again the website. We are investing into Uruguay guanare forest plantation, and then in Zimbabwe for a similar activity. There is something related also to Brazil and the biodiversity of the Amazonian. So I would say that one of the first questions that the administration brought up was, how do we verify that this is actually happening, very, very clearly. And I have to say that the company that certifies us is actually super transparent. So they gave us all the insights, but of course, having an automation with a clear history of all the transactions that allows you to understand from the very moment in which you trade your money for crypto and token, and then how this gets utilized down the road up to the the source, the project where actually you are contributing in some way. So definitely I truly believe this is one of the most wonderful and beautiful applications that this technology can bring us. Okay, so the conversation is becoming really interesting. Which other questions do we have for our guests? I know
Michelle, I wanted to add there is an initiative from Filecoin. I'm not sure if you're familiar with Filecoin blockchain, and they are financing refi projects. Personally, have attended their conference in Paris. I believe they change every year where it's hosted. It's called Sustainable blockchain summit, and over there I see it's without any charge. All the previous discussions are on YouTube. So there are many blockchain startups. Unfortunately, I can't recall now the names to present a few players, but if someone is interested in sustainable models or startups related to energy, or they want to start their own, maybe they can get some grant to kickstart their project.
Okay, great. Of course, this is something that we usually say at the end, but now that we have the chance to say it to our audience, at the end of the episode, our guests will tell you where you can follow them and reach them out, through social media or eventually LinkedIn. So please stay until the end of the episode so that you will discover it. And by the way, yes, I know that we have other questions.
Yes, I have a question for Nikolaos. As you're a blockchain expert, that's going to be really interesting. So recently you shared an article about the London Stock Exchange. I don't know if we can share it.
Yes, of course. I will.
Share,
Yep.
Yeah, so that.
Okay, here we go. Should be this one.
This one, yeah. So LSE Group plans to offer blockchain-powered market for traditional assets. Can you tell us? Can you develop a bit more about what exactly the LSE is considering in this case?
So of course, trading securities on blockchain, I believe it has been already among the very first envisioned use cases. And I'm hearing now, I'm hearing since many years ago about the impact of tokenized securities. There were many projects. I don't remember the exact day, but probably all of us that were working for a couple of years in the blockchain industry. We remember Polymath and a few other projects that they were trying to create tokenized securities, different token contracts, but they got limited adoption. I will say the last 2 years, we have a total shift. One of the institutions that are responsible for changing this culture and I believe inspiring also a lot of traditional banking institutions getting involved is the Bank of International Settlements. Personally, I haven't seen any other traditional institution investing so heavily and bringing really innovative concepts to the market. I believe they have managed to engage most of the global institutions, not only in Europe, but across the globe. And also I have seen many great use cases in Asia. LSE is offering not something groundbreaking in terms of tokenized securities, I would say. And the most important, let's say, from this is that is a regulated institution. There is a hint, though, that this will be enabled only if they will get the necessary regulatory access. I guess we need to step back and understand if the existing regulation will allow the trading of tokenized securities. From my perspective, there are forward-thinking regulators. Definitely, for example, Luxembourg is one of them. They already took the necessary steps in order to enable innovation, to allow traditional securities to be tokenized, create a new novel models that will enable also applications for retail and institutional investors that we haven't envisioned. But at the same time, even in progressive countries like UK that they have established capital markets and well recognized, we don't see that the regulation is following the market innovation. My key concern is that always there are organizations that are lobbying against innovation. They find problems where I see solutions because they want to preserve either a monopoly or because they are very well established players, and they don't want to lose their convenience or attract more competitors. So what we see here is a very an established player when it comes to it's one of the biggest stock exchange, the London Stock Exchange. Obviously depends on how you read the article. I mean, it's already in the subtitle is considering uses a separate entity. So already from the title of the article, it hints that they don't want to mix, let's say, their core business with this likely an innovation experiment yet. But they definitely prepare for the next day. They know that this is coming, it's approaching, the market is becoming more mature, and they see the benefits. That's why they're investing, and they're taking a significant risk, because it's when you are engaging with innovation projects, you take a reputation risk, you take a cybersecurity risk, you take an investment risk. There are so many risks accumulated, but they still believe that it will create benefit for their customers. And if they create benefit for their customers, they will create also benefits for the organization. From my perspective, tokenized securities, the most groundbreaking innovation that they will introduce is they will create new models. I was hearing in a presentation recently how WeChat payments in Asia, the biggest innovation that they brought is due to the creation of different peer-to-peer markets. We have seen novel financial applications that they were not existing because there was no infrastructure. So from my perspective, I'm not really keen on seeing what innovation established players will bring, but if those players create open the road for regulated activities and create the core infrastructure, I'm quite confident that new startups or more innovative companies, they will create new models that we still today cannot envision.
Okay, it remembered me a bit like when Jeff Bezos launched the Kindle that they were selling books. I'm joking, but anyway, okay. So sorry.
Actually, no. I wanted to go back to one of the points of Nikolaos, because this is one of the things that we were discussing yesterday. When particularly when you said that these established players, they actually one of the problems and the blocks to innovations are actually established players that they see problems or were actually UC solutions, and so when innovations is not coming, it's because of they are blocking this sort of innovation to come through. So one of the questions that I have for you is it the only solution for whatever innovations is to come? Is it the big players need to adopt it, or do you see any other way to go around it? So do we always have to wait like big players like the London Stock Exchange to actually go through and open the road for anyone else?
I'm really curious to hear also Theodora opinion on this. Theodora,
yeah, this is an open question. Yes, it's
okay.
an open question.
Let's start from Theodora.
It is an interesting question. I think when we were writing the second book, that was one of the debates that we have too, when we're looking at if metaverse is going to be the next version of the internet, who will be the players, right? Will they be the same big tech companies that are dominating the space right now, i.e. the Googles, the Microsoft, and the Meta of the world? Or would it be new companies that we hadn't heard of, right? Just like how Google came about, or just like how Apple came about a long time ago. I think it's an interesting question. I would not completely dismiss the big players. That's just me, especially in this world. Because, for example, go back and looking at AI, right? And the onset of AI. Now, AI has been around for a long time, but looking at the latest trends with generative AI, you need a lot of data. You need a lot of computation power. You need resources. You need all of those. And quite honestly, unless you have that scale and access to that resources, it's really hard to get a big foothold into an evolving space. So that's why we see, the OpenAI, which, obviously got a lot of cash from existing players. We see Apple coming out with the announcement of Vision Pro, which many criticize is still a really high price point, but that could be an evolution of what to come.
You mentioned your book, and one of the the questions that we had for you today, we noticed that the metaverse economy after the launch has been number one in the banking section in Amazon for a while. So first of all, congratulations.
Thank
and
you.
We wanted you to eventually tell us a little more about your book and quickly present it to our audience. Additionally, I would like to ask you, even if I didn't read yet the book, but I could check, the chapters and read something. I didn't finish it, but in your opinion, what is still missing into the metaverse space? What do you think that the startup or these actors should propose in order to attract more attention and eventually make the metaverse become a mainstream?
Oh, that's a really good question. How much time do you have? So I will be honest. We first started writing the book last year. I still remember it was summer of 2022. And at that time, let's just say the space didn't really have a good reputation. And then for the whole year after, we were kind of like in a spiral, if you will. There were a lot of negative views on, what our company's doing. As you had pointed out in the very beginning of our conversation, is it still even around or is it dead? There are a lot of challenges. Just like any other new tech paradigm, you will have challenges. So one is that I briefly touched on, access to devices, be it from a price point perspective or be it from just a pure digital access perspective. There's still millions of people who do not have access to the digital world. And even if they do, to be able to access an immersive environment, you need bandwidth, which is important and expensive to come by. So I think that's one. The user experience by itself, anyone who is familiar with the space knows that it is really hard for the on-ramp to go from fiat to digital assets. So that's another big problem I believe that some companies are trying to solve. Because if you ask me what is my passkey, I'll tell you, oh, wait, let me look at my sticky note, which is absolutely not what you want to do. And then there's a whole question of digital identity, right? How do we solve that? Again, there are people and companies looking at ways to make it easier, to make it better, to make it safe. But I think there's still a lot of evolution that still needs to come by. And then from the very beginning of the conversation, Nikolaos touched on regulation, right? And since we are still in such an early phase of what could be, that still need to be defined. And then at the end of the day, technology doesn't exist just because it's cool and sexy and shiny. You need people. And to have people and community there, you need to have use case, right? So all of those elements need to come together for it to thrive.
True. Okay.
I'll
Frank.
go. Yeah, I wanted to ask to Nikolaos. I've been thoroughly looking at your profile, Nikolaos. You are an angel investor. That correct?
Yes, I have did quite a few, let's say, investments the last 2 years. I'm not sure if this makes me an angel investor. I guess yes.
I can. Yeah, you about 10 blockchain startups you're saying, and I am wondering. My question for you is, what makes a project stand out for you? Of course, beyond the ability of the project to make your money back, I'm wondering if there are like some key characteristic of the project that you look at when you decide to invest, and if there is an intersection between the key characteristics and actually the ability of the project to bring to make your money back?
That's a great question. I will say that I'm not the typical angel investor. Myself, I'm attracted by two different types of deals. The first one is come in the company early, and I'm joining only if I have, let's say, the opportunity to get my hands dirty and have something concrete to support the team. So I'm more actively involved than a typical angel investor in creating a product. This is something that drives and creates some excitement to me, helping companies setting the right foundations early and building the product. And there is also another asset class that are established projects that currently didn't find product market fit. And I like joining the team, let's say, with some support capital and particularly through connections, trying to revamp the product for the second asset class. I need to see an established technology, so it's not just a concept or an idea. I'm more persuaded from the technology that exists. The technology has to be somehow mature in order, with some strategic changes, to be able to create synergies with large corporations, but the team didn't manage to find product market fit for whatever reason. Probably they were too focused on building the product and totally ignored going to the market, gather feedback from the end users, and or they totally lacked the way to engage with their end customers. So when it comes to particular technologies, I was mainly persuaded a lot by the creator economy. This is quite extended what it means. But one industry that I have invested heavily is more crowdsourcing. I believe that the next phase of the web will be more collaborative, and I'm particularly excited about new projects around the future of work, how we are working together, how we establish non-profit organizations together, how we co-curate research papers and approach innovation. So I'm more particularly in such type of businesses, crowdsourcing startups.
Would you be able to share a couple example of in particular crowdsourcing that stand out to you?
Yes. For example, this might not be the perfect example, but there was right now AI. I consider AI and particularly data in order to train AI as an asset class itself. And companies that have rich data sets, they have a strong advantage. There are many companies that have thousands, if not millions, of micro workers around the world. I know there will be a big debate around exploitation of employees in emerging economies. But from my perspective, I see that a lot of those companies, crowdsourcing startups, are giving opportunities for side income revenue, or sometimes this revenue that is considered, let's say, low in terms of USA or particularly European economies, but it could totally replace or sometimes could exceed income that could be generated in local economies that are not, let's say, web related, because right now when it comes to rates of software developers, I see that the market somehow finds a way to create a balance even for, let's say, remote workers from countries like Sri Lanka or others that have definitely lower income from countries like Switzerland. If you are a very good developer, you can even get market rates despite your location. So to summarize, one application that is a crowdsourcing application is companies that have and maintain thousands or millions of web workers that train different algorithms. For example, they are used heavily in training geospatial data or in autonomous driving. They are trying to train the algorithms in order to recognize different behaviors of the car and the road. So they can train the software that will really change the way that we commute in a few years from now. Or actually, it's happening already.
Okay, thank you, Nico.
Yes, Theodora, I just wanted to go back on what you do at Unconventional Ventures. Maybe you can explain us, because I don't know it, so that's why I'm interested to go deeper in this. And you basically, it's a venture and you work in the banking sector and you are based in Washington, DC, if I'm correct, which is not exactly known for its large banking sector. So, how does it play? Is it from a regulation perspective, extra? But yeah, let's start with Unconventional Ventures.
So it is a company I started, about 7 years ago now, I think. And it came out from my work in nonprofit. So I used to work in a large nonprofit that's based in DC. And it is the largest nonprofit in the entire United States that look at what do we do for older adults, right? And so my work there for almost 3 years was looking at creating an ecosystem of tech builders, innovators, banks, policymakers, VCs, if you will, that want to do something different for older adults, for people as we get older. How do we enable financial security? Because at the end of the day, we know we are all getting older. That doesn't change. That happens since we're age 1. We're also living longer. On average, we live about 30 years longer compared to early 1900s. So how do you make use of that extra 30 healthy living years that our parents didn't have? And so that was the gist of the company, is looking at how can we use technology for good? How can we look at what people need as we get older and create better solutions? Because typically banks like to chase after the younger generation, because the perception is that the younger ones are more inclined to use technology, whereas the older ones are all just sitting home watching TV, which cannot be further from the truth. Because you look at the people that created all of the tech that we're using right now, most of them are actually older. I myself is turning 50 this year. And if anyone's going to come and say, hey, you're 50, you're not going to use tech, I'll be like, sorry, I wrote my first line of code when I was in high school. So that's the gist of the company. And then from there, it expanded more into financial inclusion on a larger scale, looking at how can we help different demographics of people get access to better banking services. So, for example, to the question that earlier, Frank, you asked Nicola on, some of the examples, one of the ones that, seemed really interesting that we started looking at is Good Dollar. So Good Dollar is a crypto UBI that's looking at how can we create a sustainable system for people to draw money from. And those are really, really interesting engagements that, without blockchain technology, that couldn't have happened. So how can we use technology for good is the central thesis of what we do.
Amazing. I have always been saying, to be honest, my entire life, that I entered technology with the idea to try to use it to change something and produce something good for humanity. One of the things that I truly believe, and I and I am not afraid to say it again here on this podcast. Probably I said in other, occasions, is that one of the cancers of the IT industry that somehow is where all, the technology happens, is the body rental model. These big companies that just are, greedy enough to hire whoever on the market just because of, the idea of giving them out in consultancy. Lasting Dynamics is extremely against this kind of model. We are towards teamwork, towards people collaborating, working together to solve a problem, and eventually even our business model is made to create a kind of partnership with each partner, each customer, so that we could grow together, solving a problem and developing something for the expansion of a group, or eventually even of the human being. That is when you arrive at the Elon Musk level, probably. But yes, I love the idea that finally on this show we are also talking about these topics. It's genuinely one of the best things that this season can propose. So Frank, you were about to say something. I didn't want to interrupt you.
No interruption. I actually wanted to thank Theodora for sharing the example, because and I wanted to dig a little bit deeper, because by looking at your profile, quite impressive, I'd say. You have a lot of experience in advertising to startups, and so since you shared an example already, I was wondering if you had more to share that where you've seen blockchain technology had an impactful had a big impact.
I would say not only blockchain, eventually even just Web3 related projects or NFTs that we have a couple of funny contents later to see on NFTs.
Should I be worried? You're saying funny content. I think another one that was really interesting. Now I don't know much about them other than what I read about them, which I'm sure you guys have heard of, is Stella. Do you know Stella?
Yeah.
So they were working with the UN Refugee Agency to try to look at, not try, but they actually did use digital cash distribution to people who are displaced. I think one of the use cases they did was Ukraine. There are 100 million people in this world that are displaced one way or another, and I think that number is going to go higher, not just from conflicts, but also from climate change, right? And so when people have to move from one country to another, the first thing that always comes to mind is how do they get access to financial services? It's really hard, because I saw it firsthand when my family moved to New York from Hong Kong. You basically had to start over. Whatever life that it is that you had, now you get a new identity in a new country. You had no access to credit. You had no access to practically anything. And so I looked at this particular project with a lot of interest, because it's fascinating to be able to dispense money to the hand of those people who need it, because they are in a desperate situation, and they can also do it without bank accounts. They didn't have to have a credit card, debit card, and they can convert those coins into US dollars, euros, or wherever they are at MoneyGram locations. So I think those are really good use cases, if you will, of technology. And another one of my favorite is Hive Online. I don't know if you guys are familiar with them. So I actually referenced them in both of my books, Beyond Good and Metaverse Economy. And so what they do is they look at the smallholder farmers in Africa. So one of the last ones that they were talking about is in Mozambique, because half of them were only paid in cash. And so when you transact in cash, you don't really have a digital record to say, hey, I am credit worthy because I have done X. You don't have that. And so what Hive Online does is they work with the farmer groups and digitize the financial records, digitize agricultural records, and put them on. So they actually have access to more. And I think lately they are also on the regulatory sandbox. They're working with the central bank of Mozambique to expand this. And I think those are, again, interesting cases of using technology for financial inclusion. And a lot of the people that they're helping are women.
Thanks, Theodora.
Okay, so time for some content. Yeah, okay, I cannot refrain myself from starting with this one. It's just of a probably funny, but at the same time a bit of a tragic thing that happened. Not that tragic, of course, but yeah.
Sure, this for him.
Yeah, not for him for sure. Let's look at it, and I want to start from this. So it starts with Imaging throwing away $350 million. This is about a guy that had Bitcoins in 2013, and then he lost all of his Bitcoin somehow.
In 2013, a British man accidentally threw away a hard drive. It contained 7,500 Bitcoin. Fast forward to today, the crypto inside that hard drive is worth more than $350 million. His name is James Howells. He's an IT worker from Wales. Over the past 8 years, he's been on a mission to find that hard drive by digging through his local dump. But so far, no luck.
Yeah, he's literally digging all around. I had a similar case. I have a friend from university. So I took the chance for saying hi, Francesco, that is quite of a similar situation, and it was very, the idea that you could have predict the value of the Bitcoin. I remember that they were mining, and some of the pioneers of this cryptocurrency, when it was worth nothing, probably 25 cents or even less. And then discovering several years later that somehow you lost either this or that, or you don't find it, like it happened with, that needs to be a nightmare. I'm really sorry for these guys. What do you think? This is quite a famous story. Of course, also the pizza one we heard. Let's start from Nico.
Yes, actually, I believe probably with smaller amounts happened to pretty much everyone who was involved really early in the blockchain economy. It happened also to me, but obviously with a very small amount comparing to the figures that we see here. I wouldn't be that concerned about this. It happened mainly because we're not well educated, and at that time there were not that many resources emphasizing on self-custody or too many tutorials, onboarding of new users, or even trusted custodians. Right now, the situation is totally different. I feel that the great majority of users have good knowledge when they are setting up a Web3 wallet. Obviously, non-IT people might find it still challenging, and there's definitely space for better onboarding, more user-friendly improvements in the UI UX of blockchain apps. I believe this is a discussion that still taking today, that most of the blockchain apps have totally crap UI UX, and I'm not sure if this is intentional or we cannot find in the industry great UI UX professionals. Yes, I'm not that concerned. To summarize, right now we have trusted custodians, people, they understand the benefits of self-custody, and at the same time we see also managed custody while they preserve, let's say, some parts of your key, your secret keys. I'm not that concerned. This is the summary.
Nico, I don't know if you really want to answer this question, but what is your suggestion to defend against, not to defend it, but to keep your own cryptocurrencies? Let's make it even more precise. Where do you store your cryptocurrencies? No, I'm joking.
it really depends. No, I mean, we can answer. It doesn't have to be about me. Obviously, using a hardware wallet is the best advice someone can give these days. But at the same time, if someone has a small amount and he's not familiar, let's say, with the tech. So I have, let's say, one friend who has invested a small amount. She's coming from totally different background from IT. And the amount itself doesn't justify the effort, or the investment in order to know how to use it, keep her private keys secure and such. So I'm always suggesting to those people who don't have big investment to just find a trusted custodian. But it's not difficult at the end of the day if you have basic, let's say, skills on how to use different tech devices and spend a few hours, you will definitely figure out yourself.
Nico, do we have an estimate about how many Bitcoins have been forever lost?
I don't have a personal estimate, but definitely there are different reports and some. I don't have the latest figure, but I will say that it could be a significant amount. Definitely, we know that the founder of Bitcoin had, if he's, let's say, dead and he will never come to the surface again, he has a very significant amount, if I'm not wrong, is more than almost 1 million. It has to be around 1 million. With a Google search, we can find out immediately. So it's a significant amount.
So pirates of Bitcoin sooner or later will come out. Someone that is trying to discover the treasure, I don't know, but that might become a scenario. Theodora?
It reminds me of how nowadays people put cash in shoe boxes and they stuff it under the bed and they forgot about it, or between walls. When I first heard that story, I thought it's actually you probing yourself. Make sure that you don't forget about your Tiffany NFT or whatever it is, CryptoPunk NFT that you bought yourself. I don't know. It's an interesting question, but I don't own any, so I don't have to worry.
That's a good way to defend against the problem. You just don't own any. Okay. Fantastic. So let's move to something a little more interesting. I would say that this video caught our attention. As usual, I introduce it a bit, okay, for those that are just listening the podcast and not watching it. So on the left side, first of all, we have two twins in this video. On the left side, the first girl is enhancing the Web 2.0 classic, super famous technologies. I would say applications, not technologies. Sorry. And on the right side, the sister is saying the Web3, alter ego. Okay, let's listen to it first and then make some considerations.
Chrome, Brave, Spotify, Audience, YouTube, Odyssey, Google, Research, WhatsApp, Status, PayPal, MetaMask, Robinhood, Nestify.
Okay, so they speak about this like the most simple thing in the world. It starts with Chrome, that is Google, literally, and then they mention a pre-search. Okay. Not Brave in this case. Okay, so my question for everyone, and eventually my co-hosts can help us developing more the topic is this Web 3.0 something that will really replace the Web 2.0? Because for those that don't know it, of course, it's just a decentralized web with libraries and APIs that allow to use a blockchain-based application rather than the classic client-server architecture, for that has been abused for so long in the development of web and mobile or whatever application. So what I'm trying to say here is, literally on the left side, we have some of the most known titans of the market that probably will not disappear that easily. I'm not expecting Chrome to disappear. I'm not expecting Spotify to disappear. And on the right side, we have either some pioneers of this sphere, or eventually something that has a certain relevance in a niche, industry. So let's start from Nico. What is your opinion about this?
It reminds me a recent tweet. I'm not sure if I can share somehow that at least the Web3 founders that are spending most of their time, tweeting, that they should start by using, for different components of their companies, Web3 or let's say blockchain alternatives. If we are investors in the industry or people who are building in the industry, there is no excuse for us to not support, let's say, blockchain alternatives to Web2 applications that at least when those are available and they are decent. Now it's not a simple yes or no question that MetaMask could replace PayPal or Audius can change Spotify. Particularly for Audius, I can say that they definitely have some solid technology, but Spotify as a business, it's not only the technology, it's most probably the most valuable asset of Spotify is the partnerships that they have with the creators, with the singers, artists in general who are posting podcasts. They are posting their music or other, let's say, creative work. So establishing just an alternative itself, it doesn't mean that it has the prospects to replace. It needs a more coordinated effort. Web3 startups have a significant advantage over Web3. Usually, most of the Web3 startups, they use, let's say, utility tokens. So they have a medium in order to incentivize their very first users. I will say that if an app is trying right now to overtake YouTube, obviously it's possible. TikTok has proved that nobody's too big, to compete. But let's say if someone is trying to establish something very similar with little innovation, it's probably very difficult if they don't have tons of venture capital money to support them, to attract their very first users, except if they have some viral marketing, let's say, skills. On the other side, Web3 startups, they have this incentive. They can use utility tokens or other type incentives to onboard both users, creators, or depending on the use case. I'm not sure if we do it properly. We see, for example, airdrops that are supposed to incentivize participation in a blockchain protocol that are totally botted. There are different airdrop farms that creating different bots. So at the end of the day, the real users that will make impact and could compete with Web2 apps, they get no value. Probably what is missing is explaining to the users that it's not only the incentive that they get right now in order to get started, but most people, they think, I will say with short-term benefits instead of long-term, is that they practically co-own this app. Probably if you are also following the Invest Bros or Finance Bros on TikTok, that if you have bought like a Tesla 10 years ago, if you have bought Tesla stocks 10 years ago, now worth, I don't know, a few millions, and they bought the Tesla instead. and probably it lost after a couple of years most of its value. I see that we fail as an industry to explain this to the users, that by joining and investing in a Web3 ecosystem, they also co-own the success of the protocol. If they keep and maintain those tokens, are very likely to grow in value if there is like real value and not just speculation, because also a lot of tokens are just speculation.
Yeah.
And most probably most end users, they don't really understand this concept yet.
Theodora?
I think one of the biggest challenge that we have with creating new platforms, for example, SocialFi, is community. At the end of the day, a social media network, regardless of tech infrastructure, it exists because there are people in there, right? And so as much as, some of us might really do not like to stay on a certain app that might had a bird in there, people still get on it because that's where people are. You need a medium for people to exchange ideas. Artists, when they load something, they need people to access them, but also buy them, support them. And I think that is one fundamental challenge, regardless of which brand, that they need to solve, is how do they bring the people, how do they bring the community to the platform? I like the ethos of ownership, right? That, the creator themselves, they actually own the assets and they get a much fairer share and payout. I think those are important in terms of monetization, in terms of who gets what. So, for example, when you post something, as we have learned, we don't own what we post. The social network can actually remove that particular piece of whatever it is that we create. So those are important development, I think, in the Web3 world, that is prompting a lot of these new companies that's looking at how can we do better. But we still need to solve how do you bring people on board? How do you remove that friction so that more people will come on, so that it's easier for people to use?
Yes, I totally agree. The onboarding procedure is usually the hardest one for every new application, not only in the Web3 sphere, even in the Web2 sphere. So that's the classic challenge that most of the time makes the startups fails. Even if they validated the business model and the idea, not necessarily they will succeed in onboarding the amount of users that would satisfy their initial analysis and reach the amount needed for becoming a famous application or one of the new unicorns on the market. Cyril, you found quite of an interesting article yesterday, that is the market capitalization of the Meta. Do you want to introduce it?
Yes. So basically, we had this question: is how much, what is the market value of Web3 compared to what we call Web2? So of course, depending on exactly what you call each one of them, the figures will differ. But we were shocked when we saw that figure, because so Web2, so the web we use every day, basically worth about $15 trillion. So that's market capitalization as October 2021. And Web3, excluding Meta and gaming, was at so that 0.03. So that should be around $30 million. No, 1 trillion. No, 30. Well, a very low number. 0.03 trillion. How much is that?
Yeah,
that's still a lot of money, but considerably less. And of course, you have Meta. So part of Meta are $900 billion, and gaming industry, so at $2 trillion. So quite a nice number. But these are profitable businesses.
Yeah.
I was shocked because I expected Web3 to have attracted far more investment, even if, it's 30 billion. 30 billion is very respectable as business. Do you have an explanation, Nikolaos or Theodora, about the discrepancies, if we can say it this way? What I mean by this is maybe, we call it a share of voice very often, and for a few years, like Web3, Metaverse, etc., their share of voice in the media has been everywhere on overpowered Web2. But when we look at the reality of where people put their money, it's not the case.
I actually wouldn't worry too much because everything is cyclical, right? Just like how fintech investment has been cyclical in the last few years as well. And, the numbers that we see this year in fintech investment is lower than how it was when it was high. But I think the reality is because the space is still really new. And companies want to put the money where a lot of the hype is. And the hype of this year is not Web3. The hype of the year is generative AI. Now, whether or not that is, how the future will look like, I don't know. But, things do go up and down. So I don't think this is a fair comparison. First of all, it's still really new. And second of all, I don't think it is indicative of how the future could be.
Oh, yeah, no, I wasn't implying that this indicates the future. I was saying, like, once again, in terms of share of voice, this wasn't represented, as you said, where investors put their money clearly, while not at that point. But that was, I think that was an interesting graph.
It's 2021, this one. Then we to understand in 2 years how it moved,
I wonder how it is right now.
Yeah, I wonder the same. I would be shocked, honestly, to discover that this drastically improved because that easy. But generally speaking, yeah, seems that what you say is part of the. You mentioned the generative AI. I can say even superconductors. That was another, trend of. Nico, what do you think?
Personally, I'm not that concerned about the number. When it comes to the market size of Metaverse Web3 right now, I see is 5.6 billion. So I can't see really well the number here, but definitely looks quite smaller from.
It's 30 billion, 0.003 trillion.
Yeah,
it's 30 billion.
This one,
Yeah, so right now the figure according to CoinGecko is 5.66 billion. But yeah, historically Web3 or blockchain companies are not good making money for investors. I don't know many profitable, Web3 companies except centralized crypto exchanges. And so this could really explain why Meta has this valuation. But let's not become just, among those speculation guys that they are saying that, oh no, only Web3 companies will succeed. Meta is investing really heavily. They even changed their name from Facebook to Meta to, let's say, better adopt such technologies. They are most likely the biggest investor when it comes to the metaverse. So I will say that this is definitely positive for strong believers that metaverse will become bigger and bigger. That Meta, despite the heavy losses that they are having, they keep investing without changing their strategy. Obviously, AI right now has disrupted pretty much everything, and everyone is dropping projects just to allocate more resources to investing in AI, which is well justified. but yeah, they are still among the biggest investor.
Mm.
No, that's a very
Apple,
good
in
point.
comparison, hasn't invested much in the metaverse.
You make two good points. First one, this is market capitalization, so we don't see all the investments in Web3. Okay. And the second point is this is very much focused on the consumer market. I say we don't have the business metaverse or the industrial metaverse. As we know, the industrial metaverse is the most advanced of all the metaverses. And we don't see, for example, NVIDIA capitalization in it. We don't see Bentley Systems capitalizations in it. We don't see ABB, Siemens, etc. We are big players in the industrial metaverse. They are not represented on this graph. So that's a good point. That's really one aspect of the Web3 and metaverse. It's a consumer metaverse on the market, basically.
Yeah.
You're absolutely correct. It's not just about consumers. I think the biggest opportunity, it will come from the business world. There's no doubt about that. Just look at, where companies are going right now. And Sarah, you just pointed out a few good examples. And even last year when we talked to Microsoft, for example, Microsoft is that was, first of all, not someone that initially we thought, it could be interesting, but their viewpoint is think about business productivity and think about how we will collaborate, interact with other people. It's more than just gaming. It's more than these, clunky goggles that you're going to be wearing, even though it might be sleeker in the Apple Vision Pro world. Imagine being able to be in an environment that you can interact in an immersive manner with people from the other side of the world, using the applications that you have, but not needing special equipment, having everything projected out for you. Surgeons learning how to do procedures remotely. So those are really, really interesting use cases and examples that are really real that people are testing right now, that I think it can have far more potential and adoption than just consumers.
Education as well.
Education.
Probably one of the best applications for the metaverse is reinventing the paradigm, I would say. But yeah, I just wanted to spend a few words on the meta topic. I actually think that everyone is saying, okay, Facebook changed the name to Meta. At the same time, we had TikTok coming, then Twitter with now Elon Musk X, and so probably they're struggling a bit. Then AI, then they started to advertise more on AI than on the metaverse again. I want to say that Apple Vision Pro is probably the confirmation that the validation of the idea and of the market, in the way that Meta is a kind of a pioneer in that direction. They did it very aggressively, way much earlier than when Apple could enter the game. And we know that when Apple enters the game with a new product, something is changing for real. If I remember about the iPhone, I said it tons of times, but back in time, the Mac book, the Mac Pro, any kind of computer. So definitely Meta has something to say that we still don't understand, that we still don't cannot really predict, and that they for sure they see more than us. We also have some content actually about Meta, but Frank wanted to say something.
Well, actually, it was a question for
Okay.
Theodora, but she already answered. I was going to ask her if she speaks in her book about the two different phases of the metaverse, the business side and the consumer side, but she already gave us the answer pretty much.
Yeah, that was the fascinating point, because I spent quite a bit of time talking to people that are building this outside of the US and outside of Europe. And the sense of optimism was amazing. And the things that they're actually trying out was fascinating. There's a huge ecosystem in South Korea, for example, that they're actively doing a lot of things. And there are big ecosystems in, Hong Kong and Singapore that they're also trying different things. Michelle, earlier you're talking about education. So one of the universities in Hong Kong is actually building a metaverse that bridge students from Hong Kong and China together, creating a different environment for them to learn. So those are really interesting applications that allow us to transcend the physical barriers that we have. And actually that's where I'm, I think it will be more fun than telling me, oh, I'm just going to be sitting in Roblox with my kid for 12 hours a day.
Yes, definitely. Okay.
I was gonna just add one thing. I was thinking that these episodes is about Web3, blockchain, and NFT, but I think we've only mentioned NFTs when you've introduced the episode, and this is quite interesting because everyone is now saying that NFTs are dead, right? Which actually it's what is also happening on the episode, and the reasons why they say it is because of market saturations, because of fraud, because of the big systems like have collapsed. And so what are your views? And this is an open questions on the NFTs. And we also have a piece of content.
We have Elon Musk telling pretty much what he thinks about NFTs.
Yeah, they are quite opposing. So Elon Musk,
two different
yes
perspectives.
Maybe before we go into that, we can ask the views of the
definitely.
guests. Open questions, Theodora, Nikolaos, whoever wants to go.
I think it's fascinating if you look at what some of the big fashion brands are doing. That caught me by surprise. I was in a retail conference in New York City, beginning of the year, and the head of Louis Vuitton, he was on stage and he was talking about how they're investing so much in NFT as a way for people to have ownership beyond the physical handbag, for example, or similar with Tiffany. I believe they came up with an NFT in parallel to a special design that they have. Like I said earlier, I don't own one, but I see the appeal of people wanting one. Is an identity by itself, right? Is an extension of identity. I am my ape and my ape is me. So I can see how people want to gravitate towards that.
Nikolaos, you can share your opinion, or we can actually go to the content first.
Let's go to the content first because I don't have any strong opinion at the moment.
Okay.
We'll see that Elon Musk actually has.
Elon Musk has quite a strong opinion on the topic, I would say. Let's see what he says. Okay, so he never mentions NFTs in this video, but if you search on Google, on YouTube, everywhere on social media, you will figure out that the name of this video is Elon Musk is talking about NFTs. Okay, so everyone thinks he's actually referring to that. Then eventually maybe he talks about something else, but we will figure out. Let's listen, Elon Musk.
Now let me just break it to the fools out there. If you don't make stuff, there's no stuff. Yeah. So if you don't make the food, if you don't process the food, you don't transport the food, and whether medical treatment, getting your teeth fixed, or there's no stuff. I would become detached from reality. You can't just legislate money and solve these things. If you don't make stuff, there is no stuff.
This is the guy that was pushing the Dogecoin, by the way. So just to say, what do you think? Nico, do you have an opinion on this video? What do you think?
Yeah, actually, a lot of people, are challenging ideas or, advocate for particular concepts. I believe what Elon is suggesting is go build things and let's say be part of the discussion by building. I believe particularly in tech, it's easy, to criticize and say that this is not useful. This is, doesn't add much value. But what he is saying is go build things, try to make things, to improve them. And this is definitely a mentality that I'm sharing. If you don't like something, go try to change it.
I see. Good perspective. Theodora?
Not safe for work. I will refrain from comments.
Maybe
I think
yes, sorry.
I think the NFTs aspect is interesting because yes, of course, yes, there's all the board apps, NFTs and stuff that went for ridiculous prices. But once again, as Theodora mentioned, the real use cases are on the business side, and NFT is used to prove the ownership and the traceability of microchips, for example. So there are some real applications in the real world that, these applications are not mainstream, so people don't know them. But they are not linked to the ownership of something, but as a proof of ownership of the stuff, as Elon would say.
Yeah, or give you special access to events and things like that. I do think they're valuing things even if you didn't create them. People associate value to things. I'll give you a very simple example. I'll give you a dollar bill, a US dollar, $1. Why is it $1? You assign value to something, right? And it's no different for NFT. You assign value to something. Either is an emotional value because you have attachment to it, or it's by means of an identity, right? Economic identity. But at the end of the day, you assign something to it. I think it's very easy to dismiss an entire swath of than actually trying to dig deeper to see what you can do with it.
Market demand as well can be. If many people recognize a value in something, then of course it has a value. What value it brings to the economy, then that is another matter, and is probably focused a lot in that direction. I just want to share my opinion on NFTs, because yes, of course, we know that NFTs have been ranging from ticket to access important events to unlock content into video games or metaverse, and eventually art. That was one of the first applications, of NFT. But when I registered the trademark of my company, or when I registered, got the certification for ISO 9001 or 27001, I had a very crappy experience, dealing with these entities. The idea that you have to register your trademark in Italy, Spain, I don't know, Germany, and then also in Europe, and then again in USA, and then again in Asia, because otherwise they come on, what is that? That is something that doesn't work. So simple, not to identify for anyone. I would say that finds so the NFT was when the very first time I started to read about NFT a long time ago, I immediately thought about this can be the solution for such problems. The idea that your trademark could become an NFT, or the certification that expires eventually in 5 years, be bound to an NFT, that brings physical value, solves the problem that can be recognized across a whole system, decentralized system, without being needed to talk with the different regulators, etc. And at the same time, eventually also give you some value directly in the Web3 space. With a library, with a Web3 website, you could show the actual, instance of your certification directly on your website, without the need to download and send a PDF, or eventually send a link to this, to that. Come on, I mean, I want to see this happening. I like it so much. That is my value for the NFT world. Frank, NFTs, any thought related to NFTs?
Not many more than what Elon Musk shared, but we have another piece of content which is more like optimistic.
Yeah. So this one, as far as I understand, says that NFT goes beyond, the classic applications that we have been experiencing nowadays with in the past years, probably. So let's listen.
people talk about NFTs, right? And most people, when they talk about NFTs, they miss the point. They think it's pictures. Has nothing to do with pictures. Has nothing. People are saying stuff like, well, I could just right click and save the picture. Like, you say that, you have zero idea what NFTs are. You don't even know. The thing is, NFTs eventually will be the thing that allows you to go to a baseball game, that allows you to go to an event, that allows you to have access to, imagine there was one thing that would allow you access to anything in life. That's where NFTs are going. It's all in the blockchain. You know what I mean? Because there's too much room for error in other ways of doing things. Like, the blockchain doesn't lie. If you own the contract, if it's in your wallet, if it's on your whatever, that's it. There's no customer error. There's no argument over that. It is what it is. And that's what's great about it. And so that's where the world's going to go.
Okay. Thoughts? Who wants to start?
This is
pretty much what we said until
now.
Yeah.
Theodora mentioned this on the events bit. Maybe we could even make a link with the what we were talking about in the beginning of the podcast about the green green shifts, exactly the tokenization of energy credits to prove your ownership stakes into renewable energy projects and so on and so forth. So this is probably where this is going.
Yeah, the certification can be an NFT, while instead on the blockchain you can check the whole history of transactions. Actually, even with the private office of the Al Maktoum family in Dubai, where we have been working on for a while, and this is a project for the upcoming years, was exactly saying, okay, we need to establish an entity, a legal entity that will take care of this, but let's do directly with the best technology that we have on the table directly. Okay. And I believe that this project is going to be extremely successful. Other thoughts before we move to the last steps of our episode?
Yes,
I was surprised. Go ahead.
Sorry for this. I just want to emphasize that the NFT is just a token standard. A token standard is a software, so it's not a speculation. NFTs, as a concept, is how people are developing applications using certain software. It's just, let's say, a tool to facilitate different business concepts. Regarding art, obviously, even when it comes to art, there are many people who are saying, no, I'm not investing in art. It's pure speculation. Myself, I don't understand art because I'm not an expert. I haven't spent much time, and most probably I wouldn't invest in expensive art while there might be opportunities, or let's say very expensive fashion clothing, because I'm trying to invest in things that have, let's say, utility. This is among my investment thesis. So but I understand perfectly people who are investing in art and the value that they see. So if someone is buying a collectible for an X amount of money, I cannot say that is poor speculation. Probably I don't have the knowledge, skills to appreciate this piece of art, or for different reasons, it's not in, let's say, within my investment budget. But I definitely see real world applications for NFTs. For example, you mentioned already about the IP rights. Even European institutions, I believe the UEPO has already used NFT technology in order to register patterns, or at least they have experimented a bit with it. I'm not sure if it's on production or not. There are definitely press releases if you check around. I see tons of value in the gaming space that people were, let's say, forced by big corporations to just trade within the games, and overnight they could be banned. It's still happening. I'm not sure if you are following the news about different, let's say, gaming marketplaces that they ban overnight their players who get caught to transact outside of the platform. So there are definitely utilities with a lot of value. Now, if there are some particular use cases that typically are those that attract the publicity and not, let's say, the good ones, it's not that the technology itself is speculation, probably, and definitely there were certain, let's say, showcased examples that they were poor speculation and they didn't add much value and they attracted a lot of bad publicity, but it's not the whole industry like that.
Theodora and Cyril, I know you wanted to say something too.
No,
Yeah.
Oh, sorry. Go ahead,
Go-
Theodora.
I am sorry, I'm speaking on top of everyone. I think the only one thing I wanted to add was when we think about what this piece of software or technology enable is one of the things is financial inclusion. And that's when I keep hammering on people. What else can it do? It's more than fun, it's more than, hype. A lot of people think of it as hype. Think about people that are creating all of these assets in the digital space. And now they have a way to prove that they're the ones who created it. They can get money from it. And perhaps one day we can actually change the way we assess credit risk and perhaps extend additional financial services to this new world of creators. Right? Because that's what a lot of these technologies is about. We keep going back to the old paradigm on, well, you're risky because you didn't do X, or you're risky because the mode that you work does not give you a stable paycheck every 2 weeks. You don't own a house. You don't do all of these. But this is a brand new paradigm that allow us to think of risk differently, that allow us to extend credit to people differently. So it's opportunity.
Yeah, I agree. Cyril?
Yeah, sure. No, just wanted to make a comment about who was the speaker on the latest video. It's Dan Henry. It's an entrepreneur, but more on the agency marketing services side in the US. A bit like our friend Gary V. So on a similar market, and Gary V is also known for investing a lot in NFTs and Web3 and stuff like this. So it seems that there is a movement in the US from a particular audience.
Mm-hmm. Yeah. Okay. Very briefly before closing this episode, I think I wanted to go through some articles. Actually, we have only 5. Very briefly, this one says Bitcoin ATMs. What you need to know before buying Bitcoin at an ATM. So buying crypto doesn't have to involve dealing with the complicated exchanges. In some places, there are ATM machines designed specifically for facilitating transactions. Comments on this?
I mean, who knew? I couldn't believe it when I saw that.
You literally buy Bitcoin. It's not about withdrawing the Coinbase and several others already provided with the credit cards and stuff. So here is about buying it, literally a Bitcoin ATM.
I would say in terms of banking regulations and know your customers, that's pretty terrible. so sounds like a criminal gangs paradise, these ATMs.
Somehow, yeah, probably yes. Okay.
If I may add about the Bitcoin ATM, most likely they are addressed to, let's say, to very specific categories. Their fees usually, wherever I have tried to search, are enormous. In Greece, at least, there are 1 or 2 companies, I'm not sure. And recently they were charging like 8%, while this percent is huge. So I guess they are only referring to people who don't want, let's say, who don't know how to use crypto exchanges and such, or to those that they don't want to appear. But I'm pretty confident that now they conduct KYC, so I'm not sure what's the reason to use an ATM.
You know they have Bitcoin ATM in Korean grocery stores here?
Oh, that's great. And
Yeah.
how about the fees? They charge enormous fees or acceptable?
I didn't look, but it was fascinating. And it's not just one. I've been to 2 different Korean stores, and they both have a Bitcoin ATM in the front. And the down the street, actually, from here, there's a Bitcoin ATM at a gas station. So,
and do you
is
pay
that
with? Do you have to buy them with your credit card, debit card, or can you use cash?
you can use cash.
Yeah.
Oh,
See, that's the big stuff.
yeah.
Yeah, it's open 24 hours, supposedly. So I haven't tried it, but it's prominent. It's right there, right by the door. It's not like hidden in a corner that you can't see.
Interesting.
Excellent.
Interesting.
Well, time
Yeah,
will
please.
tell in this case.
Siri, what did you say?
No, I said time will tell. You know, if this become more the norm, to be able to buy different type of coins from an ATM. I think we all have this in our pocket to do any type of transactions these days, so that should be sufficient.
Yeah. That's definitely a strange thing. That's why it caught our attention. Another article was about the fall of Terra Luna, the disaster that this created, and how the community was shocked by one of the most promising projects one day before the crash, I would say. And now we remember it as one of the most catastrophic events in the crypto community, if we wanna say like that. Any thing to add? Any case study or idea?
Was that predictable? Because it was supposed to be a model that was very stable, super reliable, but there was like a problem somewhere. I don't remember exactly what was the cause. I think it was like someone selling whatever coins they did not have. But in your view, Theodora and Nikolaos, was that predictable or unpreventable?
I believe I can spend a lot of time here because I have a quite funny story. I was following Terra Luna since the very early days. The very first, let's say, time I couldn't really understand their value proposition. I was really trying to understand how they are making money and how exactly it works. Now it's very easy to respond because we know that they were inflating both the volumes and such. But I was not understanding the economics. But after let's say, because I have met, let's say, a few members of their extended team in person. I was working for a San Francisco blockchain startup at that time. And they were everywhere, pretty much everywhere. I was starting persuading myself that I had the wrong point of view, and everyone see the success. And because I hadn't invested initially, I was blaming myself that why you are following this opportunity so early, why you didn't join, and probably you are wrong. Then not only I had, let's say, persuaded myself that this is huge and probably going to overtake traditional payment companies like Visa or MasterCard. I have even written my thesis. I was studying at that time at the University of Malta in the Center of Distributed Ledger Technology. And I have written my thesis why algorithmic stable coins could be viable, and also I was backing this, let's say, with software that could allow algorithmic stablecoins to be viable. Obviously, until now, in the not in the bibliography, in the real world, there was not a single, let's say, algorithmic stablecoin that could keep the pegged value, and it was only Luna. And I have finished my thesis. I was waiting probably a few months because it was summer to present to my professors, and then realizing that my whole thesis that saying that Terra proved that all algorithmic stablecoins in the past didn't work, and I had lost both money because I had invested at that time in Terra and USD, but also my thesis was a total crap because it was proved everything wrong. So yeah, it was surprising that happened so fast. Probably. Probably I was part of the bubble because I had persuaded myself that this has prospect and works. But at the same time, it's still surprising that happened so fast in like one single day. Everything has collapsed. This was surprising. And now we can understand why. Because everyone was swimming naked, and this, let's say, financial event, has proven that a lot of, let's say, well-established players at that times, Celsius, BlockFi, Three Arrows Capital, FTX, all those, they had already financial problems that they didn't want to admit. Otherwise, if the other players in the market were strong, I'm pretty confident they will try to somehow minimize the damage. This has led to a really extended bear market and very bad publicity and toxic relations with regulators.
Definitely. Theodora, a question for you that might be related to the bear market and what is happening now in this sphere. 2024, I guess it's April. We should have the halving event. And as we know, usually this in the Bitcoin community, makes sure that the interest comes back, to the blockchain topic, and it is probably connected to the fact that Bitcoin price goes up, or this time down. We don't know. Every time we have to discover. What are your thoughts around the Terra, around the bear market, and the fact that probably next year something should happen?
I don't have a crystal ball, but recently I did talk to Caitlin Long, and she is very bullish about next year with the halving event. So we'll see what happens. She thinks that is going to go up. Yep. It's going to go up substantially, and things going to be a little bit smoother. So we'll see.
Yep. Yeah, of course, when that happens, usually the attention to the market comes back, right?
Mm-hmm.
Okay, I would say that we used up all of our time, and I'm really grateful for this wonderful conversation that we had today. I want to thank you, Theodora and Nikolaos, for being here with us today. And I would like to give you the space to tell our audience how they can follow you and keep in touch with both of you. So, Theodora.
Yeah. So the latest book, The Metaverse Economy, just came out in August. So you can look for it. metaverseeconomybook.com, find it on anywhere that sell books, and I'm on LinkedIn, so it's pretty easy to find Theodora Lau. Thank you, and thanks for having me. It's a wonderful conversation.
Thank you very much. Nikolaos,
thank you also for having me. I really enjoyed the discussion. Probably I will share my LinkedIn link. You can just send me a connection request, and I will definitely respond if it's not a spam message. I'm getting tons of spam, but I'm always responding to messages if I know are something custom and they really address to me, and not just mass sent to hundreds of people to generate sales.
Okay, so thank you, Cyril. Thank you, Frank, for being with us. Hopefully, this was another good episode for our audience. This is definitely the last episode of our season number 2. Don't worry, because we are already working on season number 3, and you will not forget about us. We will come back soon. Thank you very much for all the support and all the effort that you have been putting into following us, liking our content. That motivates us to continuing and definitely to try to also innovate again and again every season with some changes that definitely will arrive. So thank you, everyone, and see you on the next season. Goodbye. Thank you. Bye-bye.
Thank you.
Bye. Thank you.